everybody. Please, can you hear me? If you can hear
Good
me,
day.
please, can you hear me?
Yes, you can.
And you can see my screen also.
Yes.
All right. Our time is 8 o'clock.
Okay.
Okay, it's exactly 8 now. We can start. Um, Good day, everybody. So I'll start from a quick revision for last class. We explained that market always moves from range, starts in a range or sideways market, and then to trend, from ranging to trending, ranging to trending. And then we saw that we can have three uh, types like looks for a ranging market. We can have one that is ranging in two horizontal prices like this one that we have here, and then we can have another range that is in diagonal like this, tending going to position, and then this other kind of range that is looking upward. And then we explain that the low, part, this upper part is our support, and then the upper part is the resistance. And then I explained that when it is trending, going back and forth between two prices, and then have market will now break out. And said we have like two different types of breakout. We have like two different types of breakout. The breakout can it can break out towards the upward direction. It can break out towards the downward direction. Please, are we still together? So the breakout towards the upward direction is the one that we do. This is like that break out towards the upward direction, and it can break towards the downward direction. And then it can break in the diagonal range, can break out, or it can break out towards the downside. And then that's what we let it break out. If it's for this one also, it can break out towards the side, or it can break out towards this downside. So what we call resistance, resistance is after you have a breakout, market come back to this level. So when we test the previous resistance, that is that when the resistance is broken, it turns to support. So this resistance is broken towards this side, and then whenever market goes back to the level, it will be like a support. Then market expect price to go up again, and same for support. Support is broken towards the downside. Whenever market will test it, is when price raise back to a previous support or its previous price level, call it a test. So the third price to give that support usually will come to after a real breakout. And the same for all these diagonal. If it reverse, you expect it to go up. If this second one should also test, expect it to go. Then I start to draw um, the support resistance. I mean the support resistance. Let's just connect two dots, point A and point B. When you connect point A and point B, you stretch it out. Then you expect the third dot, you expect price to come back to the place they thought time, and you expect price to go from the third. The second also for example, want to extend demand, wait for price to come back to the third. So having said that, market goes from range to trend. So it means that after you have a range, you always have a breakout. When market starts with a ranging market, you expect that it will break out. And another name for range, maybe I should say that one now. They can say consolidation, that market is consolidating. Consolidation is the other range. Whenever they expect it break out, the trend can break up to the upside or break to the downside. And then there's a rule for it. I'm just trying to do a quick recap of what we've done last class. So the rule is different until it's bent. And don't forget that we have two types of trends. So if you are in an uptrend, you expect that market is going higher highs, higher lows, higher highs, higher lows. So in an uptrend, that okay, if you are buying, you should also be buying. And if you are selling, that is in a downtrend. Downtrend, market is in a downtrend. You should only look for sell opportunities in that trade before expecting lower highs, lower lows. So in that trend, you look to sell. But the rule says that the trend is your friend until it bends. That means that the trend can bend. That means the trend can change. And I could explain that to know when trend has changed. This is how I explain that. For example, this is a trend that is trending towards the upside, and then forming higher highs, higher lows, higher highs, higher lows, higher highs. Then all of a sudden, market did not point higher low. It just suddenly pointed lower low and lower high. So this shows that the trend change that went from printing higher highs, higher lows, higher lows, higher highs, printing lower low, lower high, lower low, lower. So it shows us the trend that has changed. So if you are buying for it, that's why the market is different. Before it was buying. So if market was going this way before, you should look for opportunity to buy. And then the market is coming down. And then I now saw that market has created lower low. It has broken the previous higher low. And it has stopped printing higher low. It's not printing lower low. So from this, I should start for opportunity to sell. And the same for a downtrend. It can bend also, it can change. So you can have um, market printing lower high, higher low. So it shows instead of printing lower high, lower low, now printed higher high, higher low. It shows that trend has changed. So before around here, if you see the market is moving opposite direction, you should be looking for opportunity. But now that you saw that the trend has changed, so you should also change your position because the trend is your friend, and your money as a retail trader cannot move the market on its own. So that is how to follow the trend. Just follow the trend. When they are buying, you are buying. When they are selling, you are also selling. So please, I want you to remind me, uh, in case I forget, I'm just dropping this, that please try and remind me to teach you how to mark correct eyes and this is the real issue. Some people will just mark eyes and low. That is wrong. So they now say that the trend has changed. Whereas it has not changed because in a real chart, let me just show us something. In this different pair that we have here now, let me show you. Now, look at this one now. This chart, look at this one. You may not know how to which if you can say this is your you can say this is your high, this is your low, and then somebody can say this is my own high and then this is my own low. So how to mark correct eyes and this if I forget, remind me. It's very very important. We should learn how to mark correct highs and lows in the market so that you know when you see this one now, market has been going up, and all of a sudden you start seeing that the market has changed direction. Now going down, 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 down. It's even still going down, even till now, still down. So it shows us that trend has changed. And before on this side, it was going up, 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 up from here. It's just going up, 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 up. Then all of a sudden, now down, 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 down. So it's telling us that the trend for this pair on this time frame has changed. So I'll teach us some technical terms about how to map out correct highs and lows, and then the time frames in the chart. I'll bring that one, and then we just go to the strategy, and then we have risk management. It's really I've actually learned a lot before I now discover that, oh my goodness, there's a subject called risk management, and I did not even know from my very beginning. So I would say that we should remind this, this, and please. So the last part, um, last was that I was talking about someone can do on my own. I explained this one as hammer. This is what they call hammer. Is a buy signal candle. We have another one called shooting star. It's like inverse, yeah, opposite of hammer. It's like it's called and then said it's enough because you know that the candles are always telling us stories. They are telling us what is happening. So tonight we'll be going into more deep parts of the candle patterns and the the story they are telling us. Let me try and wipe out all this one so that my chart not will not be too goodness. But okay, let's just leave that. I don't have my mouse here. I just select everything. But
Yes, yes, we are.
let's continue. So I've explained hammer, I've explained shooting star. Let's go to doji. So doji will be like this. Please, can you see my screen now? I used it to So for doji is a plus sign, and it can be red or pink color. It can be green or red color. So a plus sign, just like this. Let me put on it. So this is what they call doji. Doji. Uh, what does it mean? It's like an indecision can do. Is indecision, indecision can do. And signal is telling us that we should wait. Why? Because now, if you still remember the opening, close, highs and lows, he said for a green candle, the open we always go up, they close up, and then their um opening price will be below, their closing price will be above. And for red candle, their opening price will be above because red is always going down, and their closing price will be below. So the weeks high and low, high and now for doji interpretation is that the market opened at in maybe it went down, and then when it got here, this lower part, e now met a lot of orders, a lot of buy orders. People found this price cheap, they wanted to buy from the level, and then they now bought because increase in demand will lead to the higher the demand, the higher the price, so the price will keep going up. So market will not going up, and then it got to this upper part again, and then people wanted to sell from a lot of orders, people now push price back down, and, and then when it's now close, the open and the close is almost the same. So like the and the close, there's no more much difference. There's no big difference. There's no difference. Almost no difference. The opening price and the closing price. That's what it is. Decision, because we don't know, because it's when they bought it, it's when they sold it. So they now push price in between, tight range. This can do. You even see it in other time frames like market range. So even range on its own is like indecision. I don't want to complicate it. I don't want to complicate it. So now, the high and the low are the high, the so are the low, but so price closer to the opening. So opening price and closing price almost no much difference. So that's why it's a decision. It's telling us that you don't know what nobody's really winning. I don't say buyer or seller that is winning. So it's a weight signal. It's a weight signal. And we give us a rule. You see, all these kind of patterns, they can form anywhere. Please, if you have a note, you write this down. That all the candle patterns, because the signals, they can you can find them almost anywhere. But the only place we use them is when they are at our I will call it point of interest. I will say point of interest. What do I mean? You can find hammer anywhere. You don't find hammer
Yes.
high. You can find shooting star. It doesn't mean that on the chart. If you find shooting star should just it doesn't mean you see shooting star. That's when you say, you know, you only get for signal at your point of interest. Take for example, the previous oh my god, the previous illustrations that for range. Let me go to a this is your first touch and second connected, and then you have extended your line to your so you're now waiting for this third touch. So you already expecting that when price get this third at this point, see, you expect it to go up. So when you now when price now go here, you now see a green hammer candle formed. So hammer is now telling you that a lot of buyers here that wanted to buy this market at this price level. So is that's a signal. But if you find your hammer somewhere in between here, maybe market is trying to come to this level, you find hammer here, does not mean that you just buy immediately anytime you see hammer. In fact, if you go to the live chart, there are times that you even see hammer and you know market go up. Let's see. So we only use them at point of interest where you have analyzed, you are already expecting that um price will go up from that level. This is an hammer. I don't know if you can see it. Let me zoom it out. I want to try and zoom it out for us. Please, can you see my screen? Now, this place, this is an hammer. Is it not hammer? This is a live chart. So, and you know that market will open here, it will close here. At the close, you now say, hammer has show, let me buy. You now buy. It's not that the next candle red, part, the next candle red, another one red, red. So you would have new market how many red candles? 1, 2, 3, 4, 5, 6, 7, 8. Just after, and this is 5 minute time frame. That for each can represent what has happened in every 5 minutes. So it means that for the next 40 minutes, 5 times 8 is 40. Market was selling. Armor was here. So somebody will have looked at your account if you have bought it. You don't just use all these signals giving us these candle patterns anywhere. They come
Yes.
anywhere, but you don't use them anyhow. We use them in areas where you are really expecting them. You are okay. For example, that this one, this support for 8.3, expecting hammer, and you are expecting price to go up. Then now it's you have that hammer something that okay, so it's like people want to buy from this place, so you can then buy. Even if you are still you still buy at a calculated risk. That's why risk management is important. Even at support, support can get broken. So you can see hammer, and then the next thing they now broke the level. So it means that your analysis has failed. So then go to start that look like opposite of hammer, inverted hammer. You use it at levels where you are already expecting price to fall down. So to go down, so you have 3.8, point C of price to get to point C. When price now got the third touch, excuse me, you now saw an inverted hammer. What an inverted hammer at the top, so that's a sign. And meaning a shooting star is also called inverted hammer. So these are here. So that's a signal for you that shows that people want to sell, because you're already expecting that they should sell from here, from the pattern that price has been printing from the past. When it got here, it sold. When it got here, it went down. So at this third touch, you're expecting that it should go down. So this that you can use as a signal to pick a trade. But if you see it, maybe when market is coming up from here, you now saw a shooting star, you now go and sell, you can lose some money. So we don't use this kind of patterns anyhow. I hope you understand that. We don't use it anyhow. We only use them at the levels where you are already expecting some certain behaviors in the market. So this is a signal for wait. Wait tells us that the open and closing price is almost the same. So the next one is what. So don't forget, you only use them at your point of interest. The point that you are interested in, you want to buy from, you want to sell from, is where you use these candles for your signal, like for a confirmation before you enter. So the third one I'm going to draw tonight is the hanging man. So and this is like hammer, but it's now a red. It's red in color. I think the reason they call it hanging man, like somebody that wants to go and hang himself. You know that people that hang themselves, the leg will be downward and then the head head for the body. So it will be like this. I think it can have more weak. It may not have it. It can have it at the top of the body. So if my diagram is not perfect enough, please try and take it like that. But I think
Yes.
you are understanding what I'm trying to explain. So it will look like armor, but it's now a red color armor. Is what we call hanging man. Hanging man. So it's not like this is the head of the man that went to hang himself. This is the leg. So the head is in there. That's why the head color. I just use that as a funny way to
Yes.
remember and an hanging man. So now, what this can do mean? Just like if you are a lover of football, handles, even of the way you saw that even before a candle turns to hammer, it might have, because at this level when it was coming down here, the color would have changed to red. So it's coming down here and then all of a sudden it went up. So this could be the first half of the football match between the buyers and sellers. The market open, the first half seller 1-0, 2-0, 3-0, 4-0. Market went down. Then all of a sudden seller 4-1, 4-3, 4-4, 5-4, 6-4, 7-4, 8-4, 9-4, 10-4. So it shows that buyers won this fight, because it's like in every single candle buying and selling is happening, but the one that won the market will determine the color of the candle. If it's the buyers that won, then the color will be green. If it's sellers that won, the color will be red. But for doji, whether it's a green that won or red that won, when the opening and the close is not uh there's no much difference between them, is a wait signal. You don't use it like market does not know where it's going yet. You don't know when yet. So for hanging man, the interpretation is maybe when market open somewhere here, it went up a little to, the candle we have is open at close at the back. So up now to this level, and then people now start selling from this high. If I was bias, then 1-1, then 3-2, 5-2, 7-2, 9-2. Then at this level, people now started buying back. I don't want to forget that I'm trying to use for illustration. So at this level, people now start buying back. Please, I'm coming. I'm back now. Are we together? Are we still together? All right. So for hanging man, it tells us that sellers won the fight. Even though from here, they pushed the price up again, but couldn't win the fight. So it was the seller that won. So this kind of pattern tells us that even though buyers are still in the market, but sellers are more dominant at that level. Please, do you understand? that one. I should understand that because it's just like buyers took price up and put it up, they couldn't still that one. So when you see it at maybe at a resistance level, in your diagonal range or anything, you're already expecting that price will fall at this level. You now saw an gamer. So it's also a signal for sell. So if you see it anywhere, you can don't go and uh, just exchange for this armor. The green color is for buy, but this red color that looks like armor, they call it hanging man, is a signal candle. So I'll talk
But
down because you still need it. And you can go online. If you go online, you can there is even a PDF that is
so
called Candle Bible. I think Candlestick Bible or something like a Bible for candlestick. So it has the candles, the patterns, the names. So maybe after this class, I can find the PDF and send it to the group. Or you can go uh, online and check for yourself. So the next one I'm going to explain is Marubozu. So this Marubozu is can be two colors. It can be green and it can be red. It can be green and red. Let me do something like that. It can be green and it can be red. Marubozu. Some people will say Marubozu. Anyhow you pronounce it, that's not what we need. All we shall need is to make money. So Marubozu can be like this. So they call it, it's like a momentum candle. Like a strong Marubozu, you can have small week. This Marubozu even that like I think like three types of Marubozu. You can have just you can have at the top and bottom. I can have it at the top and bottom, but let me just for the sake of the class just draw it maybe somehow like this. So the meaning of Marubozu is that okay when market opened here, there was nobody in the world that wanted to sell at below the opening price. Nobody. So price did not come down at all. Everybody was buying and buying and buying. Maybe when it's going up here, it can come down a bit and then keep going, keep going, keep going. So, but at the opening, there was nobody in the world that wanted to sell it a little lower than the opening price. So everybody was interested in it. So we bought, and then the more sell just on this short week. just happened at the top. So this is like a very big impulse. It's like impulse. It's like a momentum in the market, telling us that uh, is a buy signal. When you see the green for Robozo, is a buy signal. So we use it
Yes, very good.
example where you're expecting price to go. And for that also, it can be like this. Also means that when price opened at the opening, there was nobody in the world that wanted to buy it a little above. So all of us was interested in selling, and they sold, they came down and closed here. So the fact is that the sellers are very dominant. For green, telling us that buyers are more dominant. So for the green, what do we do when you green can do? What do you do? Anybody? Like, and when you see a Marubozu red handle, what do you sell? Yeah. So that's just this explanation, because all those candles they have explanation, and when you start in the market, you can even candles that don't have name, you can interpret it because you shall know that the color of the candle at the end is telling us that who won the battle. Maybe the buyer or the seller won the battle. So this is for Marubozu candle, and you will see that all the candle patterns that I've listed here, each of them they are one signal, one candle patterns. They are like, it's just a candle that is called um that is named. So we have some candles that are two candles that make a name. Two candle patterns. Candle patterns. So under them we have bullish, we have bearish engulfing, we have bullish arami, we have bearish arami.
To buy.
So I, I will just I will not teach us all these candle patterns because um we don't, I'm just trying to teach you the ones that I feel we really need. Then let's list three candle patterns. Three candle patterns. We have um, we have monitor, we have we have three white soldiers. I don't just boss. Okay, let me stop. We have three white soldiers. We have okay. Let me not mention two candles. You not candidates for it. So just explain bearish, and then explain morning star, evening star. There is okay for this double two candle pattern. We have tweezer top, tweezer bottom, a lot of them. So I will just limit it to this one. So for bullish engulfing, so you
Yes.
see that you have a long green candle that is preceded by a small red. Are we still together? Okay. So let me name this one red candle. Bullish engulfing. Remember, when bullish, we say bullish means up. So I draw it this way. If you get to the real chart, you might not see it as perfect as this. This is a textbook pattern for bullish engulfing pattern. What does it mean is that okay, market was, let's say market was selling, then at this level, you now saw that there's this small uh, candle red, small candle formed, and then the next candle was now big. It engulfed the previous sell. It's like the market makers, people that were really pushing the price, they sold with a small volume of money, because the body of the candle is also telling us something. Because you see some candles, they have very long body, and then you see some, their body is not very big. Then you see some, their body is almost the same. You can see get ranging, and then their the candles that are forming, all of them, they almost have the same size. Then all of a sudden, you now see one of the candles having extra ordinary body, is bigger than the rest. So it's telling us something. That can be a breakout candle that dey make a level operate from it, like a impulse. So now, the explanation for bullish engulfing means that the market maker, they sold small portion, and then they now use bigger volume of money to now buy. So if they are doing this, that is telling us that they are changing, they are closing themselves and now buying big. And you know that when they are buying, when you say they want to sell, you also sell. So for bullish engulfing, it's telling us that they sold small and bought big. So buying big, since all of us we are profit oriented, it shows us that market go up. That's why buying big. So it's signal what? Who can guess like that? But they sold small but big. So the inverse, the opposite for it is bearish engulfing. It will be a long red and a small green. So it's not long red and a small green. You know, if you look at this one, the red candle, the close will be at the lower part, and the close of a previous candle will be the open for the next candle. That's why this red is at this down part, because The close will be here, as the next candle will open here. So the candle, the open will be low and the close will be above. So for bearish engulfing, green candle close at upside. So as it's closing up here, the red will open at the top and close at the bottom part. So this is how a bearish engulfing pattern looks like. The interpretation is the market has been buying, market has been going up and up and up and up and up like this. Then all of a sudden, then all of a sudden, you now see that um they bought with a small portion and then they now sold big. So it's telling us that they are cashing out. So you should also be selling with them. Do we get? So it's a sell signal also. Please, do you understand this also? Okay. There's another pattern that I think more. So actually, bullish arami, bearish arami. So for bullish arami, it will be like this. It will be a small grain after
Yeah, thank you,
open
sir.
candle
Um, no
here,
question so
come
far, but yeah, just to remind you
don't
about
really know
how to
what
the highs and lows.
is can like okay, let me draw. This one will be red. So some people they call it praise. And don't wipe. Oh. Okay. It will be on Euro US. I'm sorry. I need to but I don't know the broker I used to.
Thank